Hello, my name is Frank Cartwright, and I am the Director of Yield Investing. Thank you for taking the time to watch this video. It is going to be a short 10-minute explaining video about what we've been doing over the last 3 years very successfully for clients, about how to invest in hassle-free, high-yielding properties in the UK. So effectively, Yield Investing, we are a development company. We're based in the northeast of the UK. We have a full on-set development and construction company built internally. And what we're doing is building residential asset classes where we vary quite significantly, and why we think we're very innovative in the approach that we're taking is that we build the residential asset classes, but we then lease these properties on long-term commercial tenancies with housing providers. And I'll come into a little bit about what a housing provider is and how that works. But what we're really trying to do is bring forward a full hands-free, hassle-free investment. And really, I brought the company about many years ago because after working in international markets for over a decade, the same questions kept coming to me from investors. If you're based in Dubai, Hong Kong, Switzerland, and you're looking for diversification, you're looking to invest in the UK, but you don't know who's going to manage it. What happens if there's voids, if the tenancy damages the property? And what we really wanted to do was bring about what we thought was the most secure methodology of investing in UK real estate. And that was by utilizing commercial contracts and delivering a completed hands-free solution for our investors. And we did this through working in a sector called the social and affordable housing sector in the UK. So this makes up 20% of all accommodation, all residential accommodation in the UK. And it falls under an umbrella called supported living. And this essentially is vulnerable adults who require a degree of support from a housing provider. And like I mentioned in the previous slide, we'll come into exactly what that is in just a moment. But these individuals are tenants who may have fallen upon hard times, are vulnerable by nature, and require support from the government to look after them. So the rents are derived directly from central government, that is the UK government, paid from the Department of Work and Pensions, and that goes to the local authority. So the rent passes from central government to the local authority to a housing provider. And so a housing provider in the UK is a non-for-profit, FCA-regulated institution whose single purpose is to onboard rent and to manage tenants. And they're working with private landlords, giving them long-term commercial tenancies, and we'll come into the benefits of why you want a commercial tenancy. And they're giving landlords core rent paid as a housing benefit. So a landlord owns a property. We're signing a long-term commercial lease with an entity that is funded through central government, and you as the landlord are holding that asset over the long term. And why this is really beneficial is threefold. Number one, the asset class is secure. So you're buying a freehold asset. So in the UK, you have freehold and leasehold. The reason why the UK is one of the most popular places for foreign direct investment is because we have one of the oldest pieces of legislation, which is the land registry. So when you buy a freehold asset in the UK, you get the title deed, you get the land registry, and you get the freehold, which means you own that asset and that land forever. It's unencumbered. With a commercial tenancy contract wrapped around that, if you are a landlord already, you'll know what the expenses are. If you're not, when you're buying an asset and leasing it back out, you have to pay management costs for the agent to look after the property. You're responsible for the damages. You're responsible for the ground rent and service charge if you are buying a leasehold. You have to be prepared that if there's a tenancy turnover, if for whatever reason the rent doesn't get paid, if your tenant is market correlated and anything happens in the economy, they may move out. You may get less rent, you may get more rent. It's quite a hands-on investment, and it's pitched more often than not as a hands-off investment. But what we've created and what we're working with these housing associations and doing is we're applying something called a full repairs and insurance contract. Now, for me, this is the biggest difference between this and a normal residential investment, because a full repairs and insurance contract is a commercial tenancy. So if you were a building owner and Starbucks or Amazon or Microsoft or anybody came to you and said, I want to lease this property, they would give you a full repairs and insurance lease. And I have exactly what that means on the next slide and how that's beneficial. But we're taking these contracts for 25 years. the rent's paid from housing benefit, and that rental amount paid to you as the landlord means 9% or 8% net for a 25-year period. Now, this is a very, very secure income stream. It's a guaranteed rental, and it has a rental assurance applied within the lease. And it has many benefits, including free property and management services, no ground rent, and a CPI link, which I'll come into in just a moment, which is an inflation hedge on the rental contract. For me, this is the number one reason why this investment makes so much sense if you are looking for passive income. So at Yield Investing, I say that this is more than a development, it's more than real estate, it's a pathway to generating income streams. And so you have certain investments performing in different asset classes and diversification, of course. This is a high-yielding, predictable income stream, and it's done through the FRI lease. And so when we say 8 or 9% returns, this is net of all charges, because with an FRI lease, you have full damage cover. So if a tenant were to come back and damage the property, it's covered under the lease agreement by the leaseholder. So full damage cover, free management services, so no deduction for the leaseholder to look after the property for you, no maintenance cost, a rental assurance, no ground rent, no service charge, no any cost associated to the lease. And that is held on a 25-year no-break clause contract with a housing association and a provider that is taking on rent from central government to look after vulnerable adults. So it sounds compelling, and I'll come into it in just a moment, and you'll be thinking, well, how come I haven't heard of this? Well, in 2018, a piece of UK legislation was passed called the Homelessness Reduction Act. And I don't want to bore people too much with the nitty-gritty, but effectively meant that you as a UK citizen have the right to accommodation should you be at risk of becoming homeless. So in 2019, there's relatively no private equity in this market. As of last year, there is billions being spent from some of the largest institutions in the world. Blackstone have bought their own housing association, and they're looking to put in over 20 billion. Goldman Sachs, Morgan Stanley, Schroders of £192 million fund. There is now a 3 purpose-built real estate investment trusts, Civitas, Triple Point, that are singularly buying UK social housing. What's interesting is last month, Li Ka-shing, CK Asset Management, Hong Kong's wealthiest individual, has just bought a majority stake in Civitas. So you may not have heard of this investment class. It's a very new investment class, particularly if you're based overseas. But I believe fundamentally, this is becoming the UK #1 investment. And it has threefold difference. Really, the #1 factor is it's a non-market correlated product. And I wish I could underline that and say it again. Non-market correlated means that it is not affected by what's happening in the economy. In the UK, we pay significantly high taxes, and that goes to free healthcare, free education, and housing. We have a large social welfare institution and infrastructure that pays for supported living. These funds have recognized the opportunity to access government-funded rents, particularly at a time when the economy looks particularly, nobody knows what's happening in the world economy. This is seen as a safe haven. The commercial tenancy element of it allows a complete hands-off investment. And finally, the rents are linked to consumer price index or inflation plus 4%. So every year you have a hedge against inflation, and you can see why. There's a huge supply-demand imbalance of social housing. The estimates are about 16.9 billion. And there's a huge supply-demand imbalance for institutions to access and accrue inflation-hedged assets. So at Yield Investing, what we've managed to do very successfully over the last 3 years is bring this highly institutional product and offer it to retail clients. And so our management team has concluded a large number of these deals, and some of our partners include Brendan Group, Allerton Group, which we've been working very successfully with over the last number of years, exiting over £420 million worth of supported and assisting living stock to these REITs, institutions, and pension funds. So what we're working very closely with the guys is basically bringing this institutional product on a retail element, and rather than putting together large £150 million portfolios, breaking them up into much more affordable and accessible kind of chunks. So really, what kind of investor does this suit? It suits income-orientated investors. 8 or 9%, the asset is owned outright, you're owning the freehold, and the rent is paid monthly. You're looking at this in a long-term hold perspective, and you're looking for a risk-averse investment. because you're buying the asset turnkey. And I'll come into exactly how that looks in a slide just after this. But it is a hands-free solution. The commercial tenancy, the fact it's built, no construction delay means that you're receiving your rent very quickly. Our sole mission on the ground is to take unloved, redundant properties, breathe new life into them through our internal construction development, and turn them into quality accommodation spaces that can be used to house society's most vulnerable. In turn, we're creating a great product on the ground to work directly with local councils. And in return, we're fueling our investors' success because we're giving them a good rental return in equal measure. Our properties are renovated from ground up, new kitchens, bathrooms, insulation, windows, doors. We have a very, very, very specific due diligence pack that we have to follow before we get the leases. Everything that we acquire is data-driven. So it comes from the provider speaking with the local council saying we need this in this area. We go buy that house, we have the lease in place, we renovate the property from the ground up, we start onboarding rent from day one, and we sell that as a turnkey income generating asset for an investor to take over. And thus far it's proven very, very popular. And with that being said, I'll just show you an example of what we're bringing to market. So this is a 2-bedroom freehold property. It's £90,000, which will generate 7,200 per year, already generating 7,200 per year with a lease that's already signed for 25 years. And the rents are linked to consumer price index. And that means it's capped at 4% and collared at 0. So it never goes below 0. And in an inflationary environment where we're at the moment, you're getting a 4% increase. And I'll show you how that looks on a graph just after I show you this 3-bedroom. A 3-bedroom, what we've done is reconfigured the property on the ground floor, added an extra bedroom. And with that being said, it improves the yield to 9%. And that's net of all charges. Again, with a 25-year lease, already income generating £10,800 with a CPI linked additive into the lease. So a typical hold for a property, we know that property is a long-term investment strategy. In your rent in year one, if we assume a 2% inflationary increase in each year, and that's compounded, remember, over time, your year 10 yield is 10.76% net. On a 25-year, if you just demonstrate here over the whole period, and really, if we're looking at that as an ROI, as a return on investment perspective, you're almost 100% entirely return on investment through the rent roll alone. Hence why we're called yield investing. You're buying the yield, you're buying the income stream, and that doesn't even counter what the underlying asset has grown in value on the property itself. Remember, this is asset-backed income. You're getting the asset and the income stream. We're suggesting here that you're going to get 100% ROI in the income stream alone, not counting on the actual underlying asset. On a 25-year cash flow, you're looking at, year 25 yield is 14.48%. And we can see why a lot of institutions have moved into this market and are buying this asset class. You're looking at the total rent received of $345,000 based on a very conservative 2% inflationary increase per annum. And that is a significant ROI over a 25-year hold. And yeah, I think what we're really looking to do and what we've done very successfully is build a very strong relationship with the council. So if we just go back to what we said about the need for accommodation, at any given time where we're operating in the Northeast, there's over 1,000 people working, circulating between hotels and technically homeless that have complex support needs. And so we're barely scratching the surface of what we could do and what we plan to do moving forward. And it's about empowering people to move through our accommodation, whilst giving a good return for our investors with an asset-backed security with a long-term income stream in place. And so we have been developing successfully, expanding our presence. Our main properties that we offer are the 2- and 3-bedroom terraced houses. We do have larger portfolios available for sale, and we do have blocks such as this, which is a brand new 4 times 1 bedroom. So it's a 4-unit new block that we finished earlier in the year in Lincoln. This has a high care support contract. So it has a £72,000 per annum income stream attached on a 15-year contract, or a 5+5 renewable contract, with a very, very highly regulated care company that are looking after the vulnerable adults in this property. You can see that the property has been renovated and refurbished completely throughout. We built it from the ground up. This is a new build complex, and this is for very, very high support needs. Once again, thank you very much for listening. I hope you found this useful. And if there are any more further questions, please feel free to reach out to your local consultant to answer the questions. We will have a lot of stock coming through over the next 6 to 12 months, and very much looking forward to have you part of the journey. Thank you once again.